Yang Berhormat Dato Sri Mustapha Mohamed, Minister in the Prime Minister's Department for Economy. Yang Berbahagia Dato Sri Muhammad Iqbal, Chairman Economic Club of Kuala Lumpur and Advisor to KSI. Yang Berbahagia Tan Sri Majid Khan, Deputy Chairman of KSI. Excellencies, Dato, distinguished guests, ladies and gentlemen. A very warm welcome to everyone, in particular our Honourable Minister, for taking time off your very busy schedule to be with us here at our first conference post-MCO. Let me also welcome here the very many people who are watching this conference virtually through Zoom, and I hope that your connections appear well and you are able to listen in to this conference as well. This is also our first hybrid event where we have a part of the participants physically present here and another large part virtually participating on Zoom. I must firstly thank the Honourable Minister, Dato Sri Mustapha Mohamed, for being with us here this morning, and to congratulate the government on the fine initiatives that have been taken in the Prihatin and Penjana economic stimulus packages that have helped many businesses as well as SMEs to pull through and survive this difficult period. It is true that this is perhaps the most difficult economic challenge facing the nation, if not the world, for many, many years. This is a health and economic crisis, a challenge between lives and livelihood, and the government has put together a right balance between the two. And this is, I believe, reflective of responsive and responsible leadership. We all do hope that things will improve in the months ahead, particularly for SMEs who are faced with issues of business survival and keeping jobs. And these are enormous, difficult times for many to survive this crisis. Now that the government has addressed the health and economic crisis post-COVID pandemic, we also hope that there will be a return of political stability to the country. Political stability is most important for business and investor confidence, and this is something that many of our investors are still hoping to see, that political stability will be strengthened in this country. The banking sector also faces many issues. There is concern that NPLs may rise and that could impact on bank revenues. Digitization and digital banking will also have a huge impact on traditional banking. The rise of new technology, including blockchain and digital currencies which China's central bank will be issuing, will also be a new phenomenon that we need to face. Operational effectiveness, efficiency, and cost containment are other challenges facing banks and financial institutions. Therefore, leadership plays an important role in transformation and change management for our banking sector. We hope that today's forum will be able to provide us with an update on these challenges going forward and help provide a roadmap for the future. And finally, we hope that our banks will do more to help business, in particular the SMEs, to stay afloat. And I'm sure all the bankers here, we have several bank CEOs here this morning, would have heard the many calls from the SME to consider providing them with an extension of loan moratorium, perhaps on a case-by-case basis, where cash flow management is critical for business survival. As there is a clear nexus between banking and the economy, we are particularly delighted to have with us Yang Berhormat Dato Sri Mustapha Mohamed to give us today's keynote address on the economic challenges facing the country. And as a former Second Finance Minister, Dato Sri Mustapha also knows the banking sector very well. In conclusion, I wish to thank all of our distinguished sponsors and partners for your support of today's event. Thank you also to all the speakers for your willingness to share your wealth of knowledge and experience with us. And thank you to each and every one of you for being here with us physically and virtually. Sekian, terima kasih.
Thank you, Tan Sri. Now, it is with great honor that I invite Yang Berhormat Dato Sri Mustapha Mohamed, Minister in the Prime Minister's Department for Economic Affairs, to deliver the opening keynote address.
Assalamualaikum warahmatullahi wabarakatuh. Very good morning. Saudara pengacara majlis, Bahagia Tan Sri Michael Yeo, President of KSI Strategic Institute for Asia Pacific, Dato Sri Iqbal, Tan Sri Majid Khan, ambassadors, distinguished speakers and participants, both physical and virtual, ladies and gentlemen. Firstly, let me thank Tan Sri Michael and his team for inviting me to share a few thoughts this morning. And as highlighted by him, this is the first program organized by KSI post-COVID, and certainly there's more to come. This program is about banking. It is called the Malaysian Banking Finance High-Level Meeting and Virtual Conference. And I would like to begin by echoing some of the things he shared with you a few moments ago, which is SMEs, in particular, access to financing. This indeed is a very important issue, in particular micro enterprises. Banks have been very supportive, of course, but help is never enough. Yeah? Banks have done well in helping SMEs in Malaysia. Banks have played a very important role in helping micro enterprises to stay afloat, besides all the help provided by government through the Prihatin Penjana, including the wage subsidy. But certainly micro enterprises in particular are asking for a lot more help. And there's also requests coming from people in agriculture that banks should be more forthcoming in helping entrepreneurs in this very important sector. Food security has become a very important issue, and I would like to echo the sentiments expressed by Tan Sri. Firstly, the government is very appreciative of the help provided by banks, but of course micro enterprises in particular, they need more help, and hopefully there'll be a solution somewhere in between so that the economy can get started again. Ladies and gentlemen, it is my understanding that this is a high-level meeting and virtual conference on banking and finance. Let me begin with a qualifier that I know nothing much about banking. Yeah? I've never been a banker in my life. However, allow me to say a few words about banking by way of introduction. In the last couple of decades or so, some of our banks have been doing very well, domestically and overseas. Some of them have successfully ventured into overseas markets, becoming world-class in the process. And today, Maybank is in the Forbes Global 2000. In the year 2020, for example, Maybank ranked number 349, the largest, the 349th largest public company in the world. CIMB is recognized in the Asian Bankers League table as one of the top 10 banks in Asia Pacific. The Public Bank Group has a wide network of branches in Hong Kong, in China, the Indochina region, and also Sri Lanka. These three brands are well known in the region. They have all made us proud. It is my hope that more Malaysian banks and financial institutions make it to the global stage. Today I've been asked to speak on the subject, current challenges facing the Malaysian economy. These are indeed very challenging times. This morning I would like to focus on a particular challenge that has been present even before the COVID-19 pandemic, which is the issue of competitiveness. Ladies and gentlemen, it is a fact that competition has become more intense in the last couple of decades, even before pre-COVID. This has posed challenges to our policymakers. Among middle-tier countries in the region, our rate of economic growth last year was 4.3%, which was lower than some of our regional peers. Vietnam recorded an impressive rate of growth of 7% last year, the Philippines 6%, and Indonesia 5%. Ladies and gentlemen, as we all know, there are many competitiveness rankings in the world, but for economic-related rankings, there are three major ones. And I would like to focus on those three. The three are the World Competitiveness Ranking by the IMD, the Institute of Management Development, the Ease of Doing Business Report by the World Bank, and the Global Competitiveness Report by the World Economic Forum. So it's the World Bank, WEF, and IMD. In the IMD ranking 2020, we ranked number 27 out of 63 countries, declining 5 notches from the previous year. Malaysia ranked number 27 out of 141 countries in the WEF ranking, compared to number 25 in the year 2018. And in the World Bank Ease of Doing Business Report 2020, Malaysia ranked number 12. And this is very commendable out of 190 countries, moving up 3 notches compared to the year before, number 15 in the year 2019 and number 12 in the year 2020. This is very commendable. Our neighbor Singapore has consistently been ranked in the top tier of these rankings, number 1 in a few cases. Yeah? In higher education, the QS World University Rankings 2021 ranked the NUS at number 11 and Nanyang Technology University at number 13, whereas Malaysia's best university, University of Malaya, was at number 59 and is the only Malaysian university that made the top 100. We're proud of the University of Malaya. However, our universities need to work harder to provide quality education to our young people to prepare them for a more challenging future. Ladies and gentlemen, I know some of us do not like to be compared to Singapore. Singapore, of course, is a small city-state. There are many advantages to being small, and hence it may not be an apple-to-apple comparison to Malaysia. We have a different socio-economic makeup. We have a different history. Nevertheless, it is useful to observe the success factors of Singapore and explore what we can do to improve these rankings. The factors that have led to Singapore's success: stable government, high-quality education, a dedication to meritocracy, business-friendly policies, the focus on innovation, excellent soft and hard infrastructure, and a focus on high-end manufacturing and finance are among the factors that have resulted in Singapore doing well. Singapore has been a developed nation for a number of years. There is therefore a lot of catching up to do for us to maintain our position in the region as the most competitive economy in ASEAN after Singapore. We have to back up and get our act together. COVID-19 has provided a window to address some structural issues in the Malaysian economy and to implement bold changes and radical reforms. Ladies and gentlemen, a day after the new cabinet was sworn in, on the 10th of March, the Prime Minister announced the setting up of the Economic Action Council. The EAC, chaired by the Prime Minister, has been very focused in designing and implementing strategies to deal with our socio-economic challenges, especially those arising from COVID-19. To get to where we are today, there have been many engagements and close coordination between all agencies of government, businesses, and various organizations involved in the recovery process, including the Association of Banks. The Economic Action Council has deliberated on many issues, and the economy is already showing signs of recovery. For instance, the movement of people in retail and recreation has improved significantly to about minus 20%, currently compared to minus 80% during the MCO period. Retail activities have regained momentum, with the number of visitors to malls reaching half the level recorded before the MCO. Vehicles on toll highways has normalized to pre-CO levels at about 4 million vehicles a day. Maximum electricity demand has been restored to its normal of about 17,000 megawatts since its unprecedented decline to about 13,000 megawatts during the MCO. More than 85% of construction sites are back in operations. Domestic tourism has also rebounded. Hotel and resort bookings are picking up, albeit relatively slowly. The number of applications for manufacturing licenses to MIDA are on the rise after hitting its lowest level in April 2020. So these are some indications, some numbers indicating that we are on the road to recovery. Ladies and gentlemen, COVID-19 has presented opportunities for us to reform on many fronts. The Mandarin word for crisis, Wei Ji, is composed of two characters, one meaning danger and the other opportunity. This is a well-known word which has been used many times all over the world. Going forward, the government will address a number of issues in a long-term economic recovery plan. There are a few, but I would like to highlight three of them. One, addressing red tape and regulatory issues. For example, according to the World Bank, businesses in Malaysia need to take 17 days to deal with procedures related to starting a business. This is compared to only 1.5 days in Singapore and Hong Kong, and 8 days in South Korea. Number two, the mismatch between labor demand and supply, the unemployment of youth and fresh graduates, the low percentage of skilled workforce, and our high reliance on low-skilled foreign workers is constricting the Malaysian economy's ability to compete effectively. For example, less than a third of our workers are in the skilled category. This has barely improved in the last 10 years. We've been at the same percentage for the last 10 years, about the same percentage. In 2019, non-citizen workers make up about 30% of total employment in the agriculture sector, about 23% in construction, and about 22% in manufacturing, and about 10% in some services sectors. Number three, low technology adoption among firms, especially SMEs, and more so among micro enterprises. Ladies and gentlemen, earlier this week, the government announced the My Mudah initiative to streamline unnecessary bureaucratic hurdles that are stifling businesses, especially those impacted by the COVID-19 pandemic. Businesses can now lodge their complaints of regulatory hurdles through the Unified Public Consultation Portal managed by the Malaysian Productivity Corporation, or MPC. The government has also upgraded the National Employment Services Portal, My Future Jobs. The portal provides job matching services for job seekers to secure work tailored best to their skills and competencies. When there is a mismatch between the skills of the job seekers and the jobs available, they will be linked to opportunities to be reskilled and retooled. Further, we will ramp up our digital agenda. This morning's conference is about digital banking. We will accelerate technology adoption and automation, especially for SMEs. This will not only increase efficiency and productivity, it will also help to reduce the reliance on low-skilled workers. This government will do all we can to boost Malaysia's economic competitiveness and attract quality investments. Ladies and gentlemen, in the next 9 months, the government will be presenting three major documents to the public: the medium and long-term economic recovery plan, Budget 2021, and the 12th Malaysia Plan. Early next year, the 12th Malaysia Plan will be presented to Parliament for approval. The plan will outline the key strategies and initiatives that will serve as a guiding principle in navigating Malaysia for the next 5 years, indeed for the next 10-year period. The 12th Malaysia Plan will establish a clear direction in ensuring inclusive and meaningful socio-economic development to achieve a more prosperous society by the year 2020. The plan will be aligned with the Shared Prosperity Vision 2030 and the UN 2030 Agenda for Sustainable Development. In the 12th Plan, new economic sectors will be identified and developed to create opportunities for the rakyat. Bold strategic shifts are necessary to address low value-added economic activities, inequitable income distribution, and regional disparities. Ladies and gentlemen, the COVID-19 pandemic has exposed a number of vulnerabilities in the Malaysian economy. We now have a window of opportunity to implement radical reforms. Let us seize the moment. Let us be bold in making tough choices. This is the only way forward. We do not have a choice. Let us commit ourselves to achieving shared prosperity by the year 2030, development for all, addressing wealth and income disparities, and achieving a united, dignified, and prosperous nation must be our clarion call. Thank you.